Yeah, so when we talk about like GDP, here you can see a very clear definition on GDP. So when you are being asked like a two marker, like a definition question, this is the model answer for you. Well, but we all know when we want to define GDP, there are so many ways that we can define it. But in general, we would like to use this as a standard. Okay, all right. So once again, GDP is the total market value of all final goods and services produced within an economy in a given period. So usually in different countries, they will calculate GDP every year. Okay, so when you're trying to define this, make sure you have this idea with you here. Yeah, the total market value of all goods and services. We all know that, but also, okay, also in a given period. Okay, this is very important. In a given period. Yeah, usually, when it comes to the two markers, they will give you 1 mark for, this general definition right here, the total market value of all goods and services. That's for 1 mark. And they will give you another mark if you can tell them so it is within a country in a given period. Okay, all right? Yeah, so make sure you have all the points, okay, here. All right, cool. Yeah. Okay, and when it comes to GDP, we always use monetary values to measure GDP. Okay, so make sure that GDP is not just a number, is in dollar. Okay, well, in different currencies, of course. Okay, all right. So if you look at this photo here, you can see like GDP growth in 2016 around the world. Okay, all right. So when you look at the picture here, okay, you see some very rapidly growing countries in terms of GDP growth. Can you tell me something about those countries, the characteristics of those countries who have very rapid growth in terms of GDP? Oh yeah, Robin. Sometimes, yeah, it depends. Yeah, for some countries, quarterly. For some countries, half a year. For some countries, per year. Okay. Well, Asian countries, yeah, that's true. That's true. Uh huh. Yeah. Right. Most countries, in primary sector, I would say, not completely correct, but yeah, almost there. Okay, so when I combine, the answers from all of you guys, from Matthew, Merrick, Bowen, Robin, and Winnie, yeah, you guys have the right idea. Okay, so you will see those, countries who have very rapid, GDP growth. They are all developing countries. Okay, yeah, well, most of them, they're all developing countries, like China, right, and India, right here, and some African countries. So you see, my question here is, so it means they are doing well, right? So when we look at the developed countries, they are not really growing. So does it mean it's bad for the developed countries? Yeah, because when you look at the U.S., it's like 0 to 3%. When you look at Australia, Japan, yeah, those some European countries, they are all not growing at all. Well, growing very slowly. Well, they have developed near fully already. Yeah, yeah. Okay, so that's the point. Okay, here we are only looking at the rate of change. Okay, we are only looking at the rate of change. It's not. Yeah, it's not about the absolute number that we are looking at here. Okay, when we talk about growth. Okay, when we talk about growth, and here it's just the percentage change. Okay, when you are jumping from 0 to 1, that is already 100% change. Okay, so even though for some developing countries they are having a rapid growth, it doesn't mean that they are doing so well right now. Okay, and on the other hand, when people they have slow growth, it doesn't mean that they are doing badly. Okay, all right, because we also have to look at the absolute numbers as well. Okay, all right. So here is just trying to see like how fast those countries they are developing. Okay, yeah. Okay, cool. Okay, so yeah, so we all know that yeah, GDP. We always look at GDP in order to determine the economic growth of a country. Okay, cool. So now we're just going to go back to the circular flow model that we have learned from last week. Okay, and we all know that when we look at circular flow model, we know there are so many ways to interpret GDP. Okay, so the first way that we can interpret GDP is just like what we define GDP here, the total market value of all goods and services. So right here, okay, so combining all the things, all the goods and services that we have consumed, okay, in the economy. So that is one way to interpret it. So there are also two more ways to interpret GDP. Uh, does anyone remember like the other two ways to interpret GDP besides the total market value? Oh yeah, Robin. Yeah. Go ahead. Okay, we need total expenditure, right? Yeah, because when you talk about the total market value, so basically is when the household they spend, like how much they have totally spent on goods and services. So you can use the total expenditure that people have spent on goods and services to interpret GDP as well. Yeah, and Julian, thank you, and Matthew as well. Right. Yeah, and also the total income that everyone has, everyone who has factor of production, okay, has earned. All right. So once again, because there are three ways to interpret GDP, so there are actually three methods to calculate GDP. Okay, does it make sense to you? Right? Yeah, because they are basically the same, but we just have different calculations, different measurements for each of the interpretation. So we have the names for them. Okay, so when it comes to total market value, okay, we call that output method. Okay, yeah, that's something that you have to remember. Okay, and when it comes to the total expenditure on the things that people have spent, we call that expenditure method. Yeah, it does make sense because it's just how much we have spent on goods and services in a country. Okay, yeah, and for the last one, the total income, well, it's just total income method. It's that simple. Okay, cool. Yeah, you all jot down the notes. Cool. Okay, right. So now we are going to go through each method one by one. Okay. Yeah. So I'm going to tell you some importance for each method. Okay. So at the end, the concepts can be linked together. So you kind of understand like when people they are trying to measure GDP, what they have to pay attention to. Okay. Yeah. All right. So let's go ahead to the first one, the output method. Okay. So the output method, to be more precise, is actually the total market value of all final goods and services that are being produced. Okay, not just goods and services, but final goods and services. So we need to know the keyword final. Okay, what that means. So for this method, the most important thing is the word final. Okay, we try to calculate all values of final goods and services. Okay, so here is a very good example to show you what final goods and services are. Okay, so when we talk about like beef, Okay, so that's one good. Okay, that's one good. But when we talk about beef, okay, the value of beef, it will be only measured in some situations. Okay, because we have to fulfill the criterion here, final goods and services. Okay, so there are two cases here. Okay, so when the beef is sold to consumers in the supermarket, do you think is a final good? Yeah. So from your side, what do you think final good is all about? Yeah. Yeah. What do you think final good is all about? Just give me a guess. Okay. 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 When someone eats it, okay, consumed by consumers, okay, or you can say, yeah, it doesn't always have to be the consumer as the last consumer, okay, as long as you are the end user uh, of that good or service, that's a final good, that's a final service, okay. So right after you have bought something and you don't process it and try to resell it, then that's a final good, okay. All right. So you would just consume it and you don't do anything about that good, then that's a final good. Okay? If you are going to do something to that good and try to resell it, then that is not a final good. Okay? All right? So when we talk about beef in the supermarket, when the consumers they buy it, is it a final good? In this case, is it the final? Yeah, it is a final good, because when the consumers they buy the beef, they will consume it, okay, right away. Yeah, they're not going to process it or and then resell it, right? They are not going to do it. So in this case, of course, is a final good. Okay, so when consumers they buy different groceries in the supermarket, they will be all counted in this method. So machines sold to factories are final goods as well. Yeah, that's a very good question, Matthew. That's a very good question. That is a final good. Yeah, you have the right idea. So you see the idea here. It doesn't. It's not limited to just consumer. Okay. All right. So this is my point. As long as you are using that good for consumption only, that's a final good, right? When a company, when a factory is buying a machine for production, that machine itself is only for consumption, right? Yeah, the factory is not going to process the machine even further and then try to resell it. Yeah, that's not the case. So machine is also a final good to the factory as well. Okay, so you get that idea here? Yeah. Anyone who has confusion on this one? Okay, cool. Yeah. So if this is the case, restaurant is a final good. So with the beef bought by restaurant is not a final good. Yeah, because the restaurant when they have bought the beef, they will process it into steak, and then they will sell it to consumers. Okay, so at that point, they are not final good, right? The value of the beef will only be counted when they are sold to consumers. Okay, yeah, from the restaurant. Okay, all right. So we are not going to measure, the cost when they are buying the beef. So technically, a restaurant can buy from a supermarket. Uh, well, sometimes some restaurants they do. Yeah, like well, but you know what? When the restaurants they buy from a supermarket, they will process it. That's the point. Okay, when the restaurants they buy food from supermarket, they will process it and then they will resell those goods. So they are, yeah. So that's why it's not restricted to consumers. Okay, so do not use consumer as as the standard to see if it is a final good. Okay, it's whether it's whether they have processed that good for further production. So that is actually the point that we are looking at. So for restaurant, it's not a final good. Okay, all right, yeah. So yeah, it's only the value when the consumers they are consuming the steak in the restaurant that will be counted in the output method. Okay, all right. So with that being said, as long as you don't need to further process the goods. Oh, Myra. Okay. Oh, okay. Yeah, yeah, it's all right, Myra. Yeah, cool, cool. Okay. So as long as you don't need to further process the goods for production, for further production, then it is a final good. Okay, as long as you don't need to further process the goods for further production. Okay, yep. The restaurant they have to further produce the beef into steak, so it is not a final good. When you, as a consumer, you buy beef from a supermarket, you're not going to make it for further production. Yeah, you are going to use it for final consumption. So for those consumers, yes. Okay, all right. Okay, cool. So I'm just gonna give you one question and see if you are able to get that. Okay, so once again, the total the output method here is just the total value of the output produced by every firms and also people who have consumed the goods. Okay, so yeah, so basically we only sum up the value added. Okay, so this is very important. We only sum up the value added by each firm. So yeah, we're trying to narrow down the case to just firms so that you can understand this more easily. Okay, so yeah, we just sum up the value added by each firm at each stage of production. Well, you will see why the definition only counts final goods and services. Okay, well, you will see very soon. Okay, but here, look, yeah, when you're trying to calculate GDP in this method, you will only sum up the value added at each stage. Okay, so here's the case. All right, so Mr. Sun is running a printing factory which sells economic textbooks to bookshops. Okay, and he buys papers from the suppliers in order to produce textbook. Okay, all right. So if the value of papers by the supplier is, $30. Okay, so Mr. Sun bought papers from those supplier, $30, and then Mr. Sun further processed those papers into economic textbook. So when the process is finished by Mr. Sun is going to sell the textbook to the bookshops for $70. Okay, and for the bookshops, they will sell the textbooks at $100. So how much should we calculate for Mr. Sun's output? So at this stage here, how much should we calculate for Mr. Sun's output? Should we use 70? Okay, or we use 40. Okay, yeah. So here in this case, it's $40. Okay, it's $40. All right. Okay. Yeah. So you see here, we only calculate the value of final goods and services. Yeah. Once again, we only calculate the value for final goods and services, and you see here that $100, that's for final consumption. Cool. Okay, and when it is being processed, they are not final goods and services. Okay, so you will see if we also count those value into GDP, you will see we will be double counting. Okay, if we calculate, if we put 30, 70, and 100 together, that will be 200. Okay, but the thing is, you know, uh, the value added based on the output in the economy is only 100. Okay, because when it is from nothing to paper for the supplier, the value added is $30. Okay, and when it comes to Mr. Sun is going to use that $30 because that is his cost. Okay, and Mr. Sun is trying to make some profit from the further production. So you will see a value added of 40 from Mr. Sun's point of view. Okay, so only 40 is the extra output right here. Okay, is the extra value of output here. So it's not 70, it's basically 40. Okay, and for the bookshop, because they bought it for $70. Okay, and when they further process it, maybe providing some services and maybe some nice packaging. Okay, they further sell it for $100. So only $30 here, okay, is being value added at this stage. Okay, so altogether 30 plus 40 plus 30 is just 100. Okay, so in this case we can see the definition right here. When we use output method, we will only calculate the final the total market value of final goods and services, okay, that is being produced. All right, yeah, because we don't want to double count the numbers. Okay, we cannot count everything that people who have consumed, because that is not logical. Okay, right? When we talk about GDP, it's all about the total value of output. Okay, the total value of output. If we count all the numbers here, some of them they are overlapped, some of them they are overcounted. Okay, so we have to just use the value added for this measurement. All right. Okay. Any questions here? Yeah, I know sometimes here it sounds a bit complicated. Like how, like, isn't $30 for which stage? Oh, yeah, because Robin, when you look at this, Mr. Sun bought those papers from the supplier for $30. Yeah, he paid for $30 to get those papers, and then he further produced the papers into textbooks, and he then sold it for $70. Okay, so the extra amount from this further production is $40. Okay, so at this stage, $40 is being created because so why it is 100 then? Because at the end, for this method, we will only measure the total market value for all final goods and services. And we know that how do we define final goods and services? As long as, okay, so it is not final if you have to further produce that goods into a different form, and then try to resell it, or when you are trying to add value into some goods, it's not final at all. So until someone consumes it, okay, yeah, as a final good or service. So okay, so why isn't it 40 plus 30 when it ends up in the bookshop? Okay, so the bookshop doesn't have to process the books. Yeah, so right now let's assume in the bookshop they will provide some specific services, okay, or maybe they will provide some packaging for the textbooks, okay, yeah, because when the bookshops they got the books, some of them they will repackage you know the books, okay. So if that's the case, let's assume that's the case. That's what we call they further process the good, okay. If yeah, so if we make that assumption, yeah, because we're just trying to understand this concept here. If we make that assumption, so that extra $30 from 70 to 100, that's the extra value added from the other stage of the production, okay. So at the end, when the consumers, which is the students, when they get the textbooks, that's the final goods and services, okay. Because when the students they get the textbook, they will just consume it. They are not going to further process it and try to resell the textbook somewhere in general, okay. All right, yeah, we're trying to just make some assumptions here, okay. Try to understand this case. Yeah, so Julian, that is why we try to assume, okay, in general we just use the textbooks for consumption. But if the students they are selling it after using it, okay, well, let's say if the students they have some very like good notes made in the textbooks, and they sell it for even higher price, like more than 100, then that extra will be added into this method as well, okay. It sounds like but people tend to sell it cheaper, so will GDP decrease? Look, in GDP there are different ways to measure this number, and for some methods they don't count second-hand trade, okay. They don't count second-hand trade. So it depends on how you define second-hand trade, okay. So, and we don't have to go to that part, okay. We don't need to know that much, okay, for GDP right now. But yeah, it's very good that you guys have that idea here, because when people they're trying to calculate GDP, they have to consider all those questions, okay. So for second-hand trade, yeah, in GDP usually people they don't count that, okay. Oh yeah, so how come the government knows these numbers and calculate the GDP? That's a very good question. That's a very good question. Yeah. So if they added the textbook, right. So for this question here, yeah, so anyone who has any ideas, like why every year the government they are able to give you a GDP number. So where did they gather the data actually? Financial records. Oh yeah, that could be true. Taxes, exactly. Remember when we talk about the chocolate ice cream? Let me just go back to that thing. No. Okay. Here. No, wait. Where is it? Come on. Just show up already. Okay, this guy here. Right? Yeah. You see here in this model, right? All firms and households, when they provide factors of production, they all have to pay taxes to the government. And at the end, look, the government has all the data. Well, yeah, even if it is not 100%, it's closely to 100. Okay, so that's why when we look at the tax record, when the government is looking at the tax record, they know like roughly how much GDP for that year. Okay, so GDP, I wouldn't say that is a 100% accurate number. Okay, there are still some biases in the GDP method. Okay, yeah. So yeah, but it will give people a very good estimate when they see GDP. Okay, even though it's not 100% accurate to what is happening to the reality. Okay, all right, but at least you get a figure. Okay, yeah, okay, yeah, okay, yeah. That's a very good question. Yeah. Okay, so that's basically the output method. Okay, yeah, we don't want to overcount, things. Okay, so yeah, so that's the output method. Okay, and then we can go to the second method here. Yeah, talking about expenditure method. It's basically just the total amount of spending from different people. Okay, all right. So here, this method here is always commonly used academically. Okay, so this method here I would say is the most important method. Yeah, among the three. Okay, all right. So when it comes to expenditure method, we try to see expenditure from different people, and that's why we have a equation here. So can you guess what are the letters here? So when we talk about C, what are the C's? Look, basically, they are all different people. Okay, they are all different, different stakeholders. Okay, who have spent money on goods and services. Okay, so when it comes to C, guess who or what that is. So capital is not. Yeah, I mean in the society, you only have like a few kinds of people. So C, when it comes to C, guess who is spending the money? Yeah, right, consumers. Okay, consumers right here. So now you have one person in the equation. What about I? Okay, investor. Okay, that's good. Yeah. So now you have consumers and some businesses. Okay. What about G? Okay, the government. Yeah, the government they will spend, right? They will spend money on some output, right? When they are trying to build like infrastructure, etc., etc., etc. When they are operating different departments, for the daily output, they have to spend money on it, right? So government. Okay. What about the last one? X minus M. Yeah, that's difficult. I don't think that people. No, not X-Men. Yeah, I think I'm just gonna show you that one. Okay. So okay. So yeah. So for C, we talk about consumer spending. Okay. Consumer spending. Right. Consumption on goods and services by households. All right. Yeah. So whatever they have spent, we are going to put that in GDP. Okay. So all the final goods and services that they have spent. You see here, all the methods. Okay. Some important points. They are all linked together. So the consumption of all final goods and services by households in this case, because those three methods, eventually they might be able to come up with the same number. Okay. All right. So yeah, the key points they should be linked together as well. Okay, so all final goods and services consumed by households. And for I, investment on equipment, machines, or buildings by firms. Okay, and also those goods and services not being bought by consumers. So you see here, they are also final goods and services. Yeah, yeah. Remember, I think did Matthew ask that question like 10 minutes ago, right? If machines for the factories, they are final goods or services. They are, because here, look at this, okay? Because when you buy a machine as a firm, as a factory, you will use it for consumption only, okay? All right, because you have your own goods and services to produce. You are just using the machines to help you, okay? All right. So you see here, you also have that rule with you. from output method as well. Okay, so yeah, consumer, investment, and yeah, government as well. Okay, yeah, government, they do have a lot of different consumptions, like buying stationaries for different departments, or investment, like I said, infrastructure. Okay, but there's one thing that you should remember in here. Okay, the spending, the consumption, they need to be related to production. Okay, so when you talk about like social welfare or pension, okay, well, they are all spending, right? They are all spending, right? When you talk about social welfare, pensions, and some other benefits, they are all spending, but they will not be counted in GDP. Okay, because they are not related to production at all. Okay, it's basically just moving the money from the left hand to the right hand. Okay, there is no production involved in those cases. Okay, when you talk about welfare, when you talk about like benefits, okay, when you talk about like subsidies, okay, yeah, you're just transferring money from one hand to another. Okay, so for GDP, we always talk about something related to output. Okay, so even when the government is spending on something, it has to be related to output. Okay, all right. So yeah, how in the reality it's very difficult to calculate GDP. You will see you can imagine a massive amount of data that you have to collect, and then you process the data in order to come up with that final number. Yeah, it's not that simple. Okay, all right. Yep. And for the last one, x minus m, or sometimes we would call that, I'll just put it in the chat, we would call that nx. Okay, for the last one, sometimes. Okay, so that is basically our net export. Okay, yeah, so we also have to calculate the exports and also imports as well. Okay, all right. Yeah, because when people from overseas, when they buy our products, okay, the money actually comes into our circular flow model. Yeah. So if export is smaller than import, then your GDP gonna be a negative number. Well, it doesn't always have to be a negative number. Okay. As long as the others, they are getting better, then you will still see a very fine number. So this is just one component here. Okay, so sometimes question they may ask you, so if we are having a bad number for a net export, does it mean that the GDP is going to be bad as well? It doesn't always have to be. Okay, because you always look at the other elements as well. Okay, the consumer spending, the investment spending, the government spending, if they're all doing well, it's all right. Okay, it's all right. Yeah. So just think about this equation here. It's just like basic mathematics. Okay, just because you have one component having a small number, it doesn't mean that the GDP is always small. Okay, you always have to consider the three other components as well. Okay, all right. But here's one question for you. Okay. So we know when people they buy exports from our country, money comes in. Okay, when money comes in, yeah. So that's our money. So the money in the circular flow model is getting bigger and bigger. So that makes sense. Okay, and that's why we have to measure the total exports. But why do we have to minus the imports? Yeah, so imports basically when we buy stuff overseas. So our money is leaving our country. So why do we have to minus that total import? Why can't we just ignore total import instead? Right? You see here, if the money is leaving the country, so we shouldn't calculate those money, those expenditure. Okay, so why can't we just leave it alone? Why can't we just ignore total import and just use total export as one component here. If you rely on import, then you would have lots of money giving. I mean, yeah, that's true. If you rely on imports, then you will have a lot of money giving to other countries. But that is not my question. Okay, my question here is is focusing on the equation itself. Okay, so if the money is leaving the country, it means they are not our GDP. So why can't we just ignore this item here and use a total export as this component? So income is not directed to firms in the nation, but to other countries. Okay, import can be more than export, so money comes in. So when you spend, you have more money to spend using other money to pay what you want. Okay, right. Well, thank you for the ideas. Okay, but even though it's not quite there, yeah, maybe it's kind of too complicated to understand the rationale behind the question here. Okay, well, but you know what? I'm just gonna give you the answer here, even though it's not okay. It's not in the syllabus. Okay, you have to know that much about how you calculate GDP here. Okay, the question that I asked, okay, for why we have to consider total imports in our GDP. Why do we have the minus total imports in our GDP? It's because, think about this. If we just ignore the amount that we have spent for total imports, okay, you will see something is being overcounted. If we just ignore the amount that people in this country who have spent on total imports, there will be some overcounted value in this equation. And do you know which component will be overcounted? Yes, C will be overcounted. Okay, all right, yeah. So that's why we cannot just ignore this item here. We have to minus that item in order to offset the spending for imports in C. Okay, all right. I know. Yeah. If you don't get it, it's okay. We don't need to go. Yeah, go that further. Okay, but just all right, why we have to minus that total imports instead of ignoring the number of total import. Okay, yeah. So it's kind of complicated when it comes to equation, and I'm glad that we don't need to know the details for the equation. But when we get to IB, you will see you will have to understand the rationale behind. Okay, all right, yeah. But right now you just need to understand what are the components. Okay, so as long as those people they are spending money, GDP will increase. Okay, as long as those people they're spending money, GDP will increase. Okay, all right. So that's the second method that we can use for GDP. Okay, but we'll still follow the same rule that we learned from output method. Okay, so the final goods and services, yeah, they are very important. Okay. Okay. So yeah. I mean, it might take some time to digest what I have just told you about, the total imports and why we have to, minus total imports. But when you have free time, take your time and try to digest it. Okay, if you don't, get it right now, yeah, and right, and see if yeah, realize it. Okay. All right. So here, yeah, let's quickly go to the third method right here. Okay, so this one here is very simple. You just have to add up all the income earned from factors of production. That's it. Okay, that's it. All right. So here is one example for you. Okay, so let's say my mom, just gives like $100, okay, to me as pocket money per month, and basically, Mr. Sun is also an Uber driver. Okay, so Mr. Sun earns $2,000 every month. So how much? So if this country, Mr. Sun is the only one living in this country. Okay, so how much should be counted for the GDP value? Contributed by Mr. Sun himself. So in this case, how much should be counted in the GDP? Oh, okay. Oh, Matthew, yeah, Bowen, yeah, $2,000. Okay, so it'll be $2,000. Okay, because when we go back to some concepts in the second method here, we talk about those spending, they have to be related to production. They have to be related to output. Okay, so here, look, Mr. Sun's mom is giving $100 to Mr. Sun. That is just like like a transfer payment. Okay, it's moving from one hand to another. Okay, that $100 does not involve any output, does not involve any production. So we don't count that $100 at all. Okay, yeah, right, yeah. So you see the idea of GDP is seeing how economically active a country is. Okay, because all the numbers that we calculate, we always calculate the numbers from different output. Okay, so any transfer payment like the 100 pocket money, we don't count that. Okay, for $2,000, yes, because it's involved output, is involved production. Okay, all right. So yeah, so $100 is not right. It's just a transfer payment. Okay, so when you come across a term like transfer payment, you know what that is. So transfer payment is just transferring money from one hand to the other, just like the social welfares, the pensions, all those transfer payments. Okay, there is no production involved. Okay, if there's no production involved, we are not counting those amount of money into GDP. FOPs are factors of productions. Well, you do chores for your mom, and she gives you 100. Well, not in this case. Okay, not in this case. So in this case, it's just my mom being generous and giving me $100 every month. Well, not really generous when you think about it. $100 per month. Are you kidding me? Yeah, I'm gonna spend up all my money, just by going to cafe on the hill. Yeah, get myself like what do they have it like a noodle? Yeah, the noodle there like $40. Yeah, like just less than 3 days. You also get yourself like a drink. Yeah. Well, no. Well, that. Let me tell you something, okay, about cafe. The cafe, look, the profit margin of the cafe here in CKY is already not very high. Okay, all right. So it's not evil at all. Okay, yeah, we are also considering students' pockets. All right, yeah, it's no. It's a monopoly. Yeah, like what can you do about it? Okay, we are living in the mountain. Like what can you do? There's not even a 7-Eleven, around the school. All right, so so many customers, but I don't think they have like many customers. Do they have many customers? Like every time when I get there, yeah. Like how do you know they are losing money? Yeah, I think they are earning money. Yeah, a little bit. Yeah, a little bit. But yeah, that. But anyway, I don't think that the cafe will be open, even though when we are able to go back to school. in the future. Yeah, well, that's too bad if you are frequent consumers of cafe. Um, yeah, but Monopoly, that's true. That's true. Okay, but we don't have any extra space for one more competitor. Okay, well, you can say the canteen is the competitor, so it's not really Monopoly. Okay, I would say is like a duo, yeah, or like or sometimes we call that oligopoly. Yeah, right. Okay, so yeah, I think I'm going to stop here. I know we have you know gone through many technical stuff today. Okay, so pretty much that you have to digest it. Okay, when you have free time. Okay, otherwise it's not gonna end well for this part. Okay, because this part here is all technical. It's all about the criterias that you have to use when you're trying to calculate GDP. Even though in your exam in GCSE they are not going to ask you in this detail. Okay, like the depth of the detail is not going to be this detail, but you just need to know like the criteria when you are calculating GDP. Okay, all right. You need to know the basic concepts, like how many methods that we have when we are trying to calculate GDP. Okay, and so now you know, and what are the criterias when we're trying to calculate GDP. Right, they have to involve output. Okay, for spending. Okay, they have to be a final goods and services. You see, they are the criteria. They are the key criteria when you are trying to calculate GDP. And yeah, and for the equations. Okay, yeah, the equation you have to remember so that you know the spending is from different people, like consumers, investors, like firms, right, and government, and also the net export value. Okay, so these are the things. These are the most important things that you have to remember. Okay, all right, yeah, and if you have more free time with you, then yeah, you can think about the question that I just asked about total imports, right? Yeah, but it's not really required in the syllabus for that question. Okay, um, yeah, cool. So yeah, I think I'm gonna end it here. Okay, all right. So if you have any questions, feel free to ask me through email. Okay, or if you have it in class, yeah, just like what we had. Yeah, I think we had a lot of questions and we did a lot of answers. So that's good. Okay, as long as you have questions, feel free to ask. Okay, it doesn't really matter if it is in the syllabus or not in the syllabus. Okay, if I'm able to answer the questions, I'll do it. Okay, all right. So just keep asking, keep asking. All right, and yeah, and I think I'll see you guys in the next lesson. Okay, so you are good to go now. Okay, I'll see you guys in the next lesson. Bye bye. Bye. Okay.